All right. All right, I'm going to share my screen. And all right. Go to the beginning. Can you hear me?
Yes.
Okay, that's a good start. All right. Hey, where's my slide?
Oh, by the way, people have received a copy of the two bills. Is that right? From Ibrahima?
They haven't received anything. I
Oh,
will send it to them at the end of the class with the rest of the videos. Yeah.
so you'll
Okay.
get, yeah, the two bills that we proposed for Colorado, and also an article from a book from Ellen Brown that I'm going to speak about in a bit. Okay, go ahead, Earl.
All right. Well, the topic is the history of Colorado's efforts to get public banking. And I think this is instructive. This movement is a national movement, and what we've done is similar to what's been going on in other states. So I think you'll learn from what we did about the problems we've all faced. And there's several kind of overriding things that are kind of unique about this, maybe not unique, but special. One is, this is an area that most people don't know a lot about. And we've discovered even most bankers do not know how banks create money, which is a huge problem and obstacle for us. And legislation generally, when it's involving a major difference in how we operate, in knowledge, can take a long time to implement. And who are we to start with? Well, I've been a lawyer in other fields. I did a little bit of banking in my first job where I represented a large corporate law firm. I handled some antitrust cases for some Fortune 500 companies. Also tax and securities, things like that intersect somewhat with finance, and did a research job on an issue involving some of our clients who were large banks, but never got into the issues of how money works. And then I did a large variety of other stuff. So when I got interested in this, it was a friend gave me Ellen Brown's book, Web of Debt, and said, Earl, you should read this. This was in 2010. And it took me a little while to get to it, but I read it and I thought, wow, this is really, for me, an epiphany. Here is how money really works, and here's a way to fix it. And I read that book multiple times. Quite honestly, I read it 4 times. I practically memorized it because it was all so new to me, and it's hard to memorize stuff that's completely new. It takes a lot of extra effort. And still, there were things I did not understand about banking, including the money out of nothing. How did that actually work? And was it really true? And why was there this difference of opinion? Later that year, I found there was a stakeholder group working on the idea of public banking. And they had some Democratic legislators in it. And they would brainstorm about public banking, and their idea was to do it based on the Bank of North Dakota. They sent a letter to the legislature's legal arm, asked for an opinion on whether, under the state constitution, whether a public bank would be constitutional. They got an opinion letter back and said, well, they thought it wasn't clear but you could clear up that problem just by amending the Constitution. And if you do that, then of course it's constitutional. But that was enough by raising some doubt and not answering the issue that the Democratic legislators pulled back. So what happened next? We talked with a skilled attorney in finance and finance law, and she suggested, well, why don't you do an initiative? And going back a step, later in 2011, around the time that the stakeholder group had decided not to pursue it, I attended a conference of Tea Party Republicans, and they had two legislators there and a lot of other conservatives, and they liked the idea of public banking. This is an illustration that this idea, if you understand it, and it's done right, appeals to people across the political spectrum. And they had one of the speakers there was a guru on public banking. Marilyn Barnewall is her name. And her idea, again, was modeled on the, of course, red state of North Dakota's public bank. I worked on a draft of proposed legislation with her. She already had a draft, and I worked on her with a bit. And these two Republicans were going to introduce it in 2012. And January came around, and then February, and around the second week of February, I wondered what's going on? Where's the legislation? So I called the lead legislator, a state representative, Ray Scott, Republican, and talked to his legislative assistant, said, what's going on with this legislation? And he said, well, we got a lot of flack from a conservative group connected with banking. He gave me a 4-letter acronym, and he said, we're not going to be able to do it. So we decided, what's the alternative? If your legislators won't do it, Democrats and Republicans, let's try a state initiative. And Colorado is one of the states that has the initiative. Many states don't. Certainly it's a way to get around legislators who are too much in the hands of the big lobbyists. So another public banking enthusiast who'd been in this group was Bob Bose, who was a member and a founding member of the Public Banking Institute, although he's here in Colorado. And also Michael Melio was on that stakeholder group. He's part of our board and quite active with our group now. Anyway, we prepared an initiative and then filed it to amend the state constitution to create a public bank. Initially, we also included a separate initiative to authorize cities and counties to create their own public banks. So what were the legislative hurdles? One thing that's a little bit unique around Colorado, as you all know, there have been initiatives around the country, I mean in the broad sense of initiative, to stop taxes, stop tax growth, and basically protect taxpayers. Not that it necessarily really does protect them, but something called the Tabor Amendment, which stands for Taxpayers' Bill of Rights, was passed in 1992. That was a constitutional amendment that made it very difficult to reduce the growth of government. To increase the growth of government. In fact, it tried to reduce the growth by refunding excess income to taxpayers, what they called excess income, which was if the government grows more than by inflation and population growth. So it was an attempt to basically freeze government. And we wanted to get around that so that the income of the bank would not have to be refunded to taxpayers. So in our initial measures, we expressly said this will not be impacted by the Tabor Amendment. The income of the bank can be kept by the bank and used for more lending or paid into the general fund. However, there's a rule called the one subject or the second subject rule, and that is that any new law, and this is widespread around the country, must have only one subject. And this includes laws such as a constitutional amendment. Well, our measure, they said, constituted second subject because we also put an exemption from the Tabor Amendment in it so that the bank's income could be kept by it. And that went up to the Supreme Court. We went through what's called the Legislative Council, all measures do. They review it, give you some advice, because a lot of people doing initiatives are not lawyers or don't have much experience, which I certainly didn't. This is my first time doing this. And then the second is a title board review, and that consists of three people: the Secretary of State or their representative, the Attorney General or his or her representative, and the state legislature's legal arm. And we did all right. We got through it on a 2-to-1 vote. But then it was shot down by the title board on the second round. The bankers appealed, and guess who was there? The major bank lawyers were there, both of the two organizations. One is Colorado Bankers Association, and the other is Independent Bankers of Colorado, which has more of the community banks, but still has some of the big banks in it, which unfortunately tend to dominate even that organization. And so I have to move this so I can, okay. So, and then it went to the Supreme Court, and the Supreme Court upheld the title board. So we were down on that round on second subject. And we tried a few more methods of getting around the Tabor over the next couple of years. Finally, in 2016, we found an answer. And this is to take a new tack. The Tabor Amendment had in it an exception or an exemption to its provisions of having to pay income back to taxpayers. And that is, if it's a self-sustaining enterprise that isn't going to depend on taxpayer money, it's not going to increase taxes, and you comply with certain requirements that are easy to comply with, and you don't receive 10% or more of your income from the state or other political subdivision in any year, and you're authorized to issue revenue bonds, and it's government owned and operated, then you are exempt from these payback provisions, having to pay money back to taxpayers. So we said, why didn't we do that? Well, this is the problem with amateurs trying to do this. But we did it, and we thought at that point there was a big problem with marijuana money, and we thought we should include that, and we tried to draft it so as to make it a single subject. Again, it was a 2-1 vote, and this time the vote that was for us was the most conservative member of the title board previously. He was a lawyer on the state legislators' legal arm, and was cautious, had a good reputation, and he thought we had kind of mastered the legal issues. The two new guys seemed to be knee-jerk appointees of the Republicans who were in the two offices, Secretary of State and Attorney General at that time. And they just seemed to be totally unopen to our ideas. And so it got shot down. And we realized around the same time that a new constitutional amendment had made initiatives harder. They, instead of requiring a 50% or 50% plus a hair, a majority vote, they would require a 55% vote, and petitions, which are the initial part of getting an initiative on the ballot, which required about 98,000 petitions, would have to be distributed through all 35 Senate districts in the state. Well, that would be hugely expensive. It was already going to cost about $500,000 to get a measure with sufficient signed petitions. And now they have to do it in all Senate districts, plus having to have a 55% vote was going to make it very difficult. And so we realized we were kind of stymied again. So we moved to the next stage in 2018, 2019, and we found a true fine state representative, very bright, a progressive Democrat, Jonathan Singer. He came to one of our conferences. He was from Longmont and read our brochure, which went into a lot of detail about why public banks would be, a state public bank would be greatly to the advantage of the state, to the community banks, and to small businesses in the state, and to all the really big issues like affordable housing and clean energy, infrastructure, and so forth. And so he was ready to go with it. And also, I had a chance with some funding and a law student. We worked up a good legal memorandum that was quite comprehensive. I also was able to hire a fine lawyer who was also on the board of the Public Banking Institute and was their policy director, Matt Stannard. And he and I worked on a legal memorandum and sent that to Jonathan Singer to send to the legislative legal arm. And a couple of months later, we got back a really good legal opinion that was signed and said public banks are constitutional, you know. And with that, we thought we're ready to go. We worked on state legislation. Another good event happened in 2019 that California passed its bill authorizing local public banks. And then we finally got to the point where Jonathan Singer in 2020 presented our bills to the leadership. We were needing to rely upon late submission. You can get a late bill in, but it requires the approval of the leadership. Jonathan couldn't just introduce the bill himself. And just then COVID started and everything was stymied because they couldn't meet in session and they had to greatly pare down what they could do. And so we were out in the cold again. And then something else happened that was unfortunate. Jonathan Singer was in for 8 years, did a marvelous job, got lots of things passed despite being perhaps the most progressive legislator in the House. But he was out as term limited after his 8 years. And just a comment about term limits, I was told it was mainly Republicans, nothing against Republicans, but it was mainly Republicans who proposed that because they thought they needed that to get long term tenured Democrats out of office. And the fact is, with term limits on a complicated issue like public banking and finance, it takes a long time to educate people and get them up to speed. And by the time they're up to speed and get into leadership, they're close to being retired as term limited. So that's an issue. And then something else came up. We discovered that there was a question that would really make banks profitable from the outset. And that is, can banks finance or refinance bonds by creating new money for that purpose? And we did some legal research. We hired a firm with our grant, a very fine business firm here in Denver, and they couldn't find any law on that issue. And I finally went back to Richard Werner's excellent articles, and which I think Ibrahima has shared with you. And his long articles describe the history of banks creating money, and he makes it very clear that banks do create new money when they purchase investments. Well, bonds are just an investment. And so, yes, banks can create new money when they do that. Why is that important? For a practical matter, it's a way for a bank, a public bank, to be very profitable from the outset. Legislators are somewhat hesitant and afraid to start a bank. Gosh, what if it fails? What if it doesn't make it? I'm going to look bad. But if you refinance bonds that are already paid for by taxpayers by a measure that's been passed, plus you've got the full faith and credit of the state behind it, and you got interest coming in at 5%. Remember, you can multiply the capital by 10 times. You can make a very profitable bank. That's why the Bank of North Dakota has averaged 20% return on equity a year for the last 20 years. So that would really help. But we didn't discover this avenue to finance. I didn't until I reread Richard Werner's articles more carefully. And by then it was too late to get into 2021. So that put us into 2022. And of course, Singer was out as term limited. Whoops, went the wrong way. We, in 2021, 2022, for this year, legislative session just ended a month ago. So it's too late now. But we had two new champions who were very enthusiastic about it, but they were both relatively inexperienced in finance. They were progressive Democrats, very bright, both of them, very public spirited, but they got information or influenced by some people in California. They really haven't shared in detail what that was, but they decided to back out. And part of it, I think, was the inexperience and the lack of sufficient other legislative support from the leaders. And also, this is an election year, and legislators are more reluctant to introduce major, potentially controversial bills in election years, feeling it will hurt their chances for re-election or election. And then COVID was still affecting the legislative agenda this year. So we're going to go for a big push for 2023. And Alec is going to talk about that effort. And I was also going to talk about our two pieces of legislation briefly. Shall I do that now or after? I guess I should do that now.
Yes, you should. You should.
Yeah, okay. All right, let me stop sharing this and we'll go to the legislation or a summary of it.
And for those of you that came in later, today you will all get a copy of the two bills. One is for a state public bank, and the other one is for city and localities public bank. We worked for it over 2 years, each one of those.
All right. I'm gonna put on the this bill I'm putting on first because it's a little easier to pass. This makes it easier for legislators who are a little on the fence to say yes, because it leaves it optional for local jurisdictions such as cities and counties, or maybe a school district or a university system. We have 3 university systems here. You have at least one or more in New York. And these institutions can decide to do it, and the legislators who authorize this are less likely to take the heat, and it's going to be up to the locals to either pass or fail by their own efforts. And this is basically what was done in California to authorize up to 10 public banks by cities or counties over a period of 7 years, and no more than 2 applications a year. That was passed in 2019. And cities in California are working on that now, and some counties and cities, Oakland is one of them, and I think Richmond, Berkeley, and a county's in there, Oakland, Alameda, is it? At any rate, they're working on their measures now. It takes time. 2 things happened in California, though, that we would like to avoid, and it's not going to be easy. But one is that they agreed to a provision against their original proposal that required 110% collateral, according to current state law for private banks, for public deposits. Those are deposits of the state of California or of a city like San Francisco or Los Angeles. Public banking experts had concluded that was going to make it harder for the bank to make a profit and make it less profitable in any event, and would hamstring the bank. And why would you ever do that? It makes sense for a private bank who is serving its private shareholders and to maximize profit for them to have that collateral requirement, because they could easily invest in risky stuff to make a great deal of profit. And then if they fail, well, they'll be bailed out. They're handling other people's money for their benefit solely. And so why would a public bank that is not handling other people's money, it's handling their own taxpayers' money, both of whom are totally aligned in interest. And there's no need for that. And just like the Bank of North Dakota, as we mentioned in a previous session, they don't have any collateral requirement, and they simply have a guarantee of the state's full faith and credit behind their deposits. It's in their initial legislation in 1919. And they've never failed, they've never had financial problems, and they've been successful now for 103 years. So that was one measure. Another one was to be a member of FDIC. The banking lobby insisted on that. They agreed to it. They so much wanted to get legislation passed that they agreed to that. And that may also cause some problems. It's more likely to encourage what we call pro-cyclical lending, which is a flaw that we discussed in our previous sessions, where private banks lend in ways that cause bubbles by inflating assets like real estate and stocks, paying commissions that for making loans so that the broker gets paid in advance, where he's not even worried about whether he'll get paid because of the advance payment. So he shortchanges the risk that's involved, and lends for basically subprime loans, and a lot of liar's loans were made based on that. And we want to avoid that and have a very strong, robust commitment to lending only for, or mostly for things that promote new goods and services, generate new goods and services, so that supply and demand are both enhanced at the same time, which is not inflationary and does not create bubbles. And then in a recession, we want to be sure the bank can increase lending. The model of the Bank for International Settlements and the Fed and the FDIC has generally been just the opposite, capital adequacy rules that cause banks to cut lending in a recession, which is the worst thing they can do. And then that would have barred the Bank of North Dakota in 2008 from preventing its recession. So these are things we put in our legislation, and we also put in boards that have a broad community base. And we have an advisory board, which gives added checks and balances on the board. And we keep the board away from politicians. Although interestingly, the Sparkasm have had a politician or two on their boards, and it appears to have actually helped them, help their political influence, not in getting loans, which we don't want them to have influence in, but in protecting the public banks from the onslaught of the private banks attempt to chop them down. And that's written about in some detail by Mark Cassell in his book about the Sparkasm, which I strongly recommend people read. It's a recent book and very good description of their powerful lending. Another thing we included in the legislation is that loans will only be made locally. And that's another thing that the Sparkasm insists on. That way they're going to know their borrowers. They're going to not be competing with each other to engage in more risks, maximize profit, but rather to serve the local community, including being able to lend at lower interest rate, to end the rather disgraceful redlining that has gone on for decades and decades, and to help many small businesses that currently find it very difficult to get loans from private banks. And the community banks, by making loans in partnership with a public bank, will be able to take on a lot of loans they would not otherwise. So it'll actually increase lending by the community banks and credit unions for the same reason. Well, those are the main provisions of our legislation. The state legislation is very similar. I'll put that on here too. Okay. All right, this is a bill to authorize one or more political subdivisions of the state to create a public bank. And as I mentioned, a political subdivision would include a school board or university system, as well as cities, counties, and even towns. And we say that towns can combine together to create a public bank. Otherwise, the bill has the same provisions to promote pro-cyclical lending, to protect it from unwise over-regulation by the private banking board. It would have its separate board or division of the banking board that regulates only public banks, because the two are so different in their orientation and purpose and the ways they respond to crises and the ways that they do countercyclical lending. Well, I think that's pretty much it. Let's let Alec go ahead on the next phase, unless any of you want to ask questions in the meantime, or should we go to the next question, which is what is our plan to get our legislation passed? Alec?
Yeah, thank you.
Okay.
So I want to do two things. One concerns the article that Earl and I sent to Ibrahima from Ellen Brown in a book called The New Possible. The New Possible. And you'll receive it because Ibrahima hasn't sent it out yet, but it's very intriguing to me, not only because for the article itself, but because of the volume in which it is included. That is to say, this volume, together with another volume that I'll tell you about, is about all of the things that people are doing or what needs to be done in the United States mostly, and also in the world. So that public banking takes its role as one of the things that needs to be done for the common good. And it's called Public Banking as a Cornerstone of the Commons. So I'll go very, very briefly through the article just so that you can understand the principles that she brings up. So she says, the very early part of the article, with the COVID-19 shutdown, one major thing we learned about money is that the central bank can supply unlimited funds to save the financial system and the banks. This is really, really crucial, just like we've discovered with the Ukraine situation, that monies were discovered very, very quickly as to how we can fund for all the weapons that have been sent to the Ukraine. In other words, the money is there and the capacity to produce the goods and services is there. So it underlies the lie that somehow or other we can't afford something. This is really a very, very major component of all of this. The trouble was that when these funds were made public, you know, increasing an enormous amount that was produced by the Federal Reserve, were not made available to state and local economies and to individuals and businesses. They went into the financial system in order to save the banks rather than in order to save the economy. And it was understood for a very long time that the financial system is there to serve the economy. And what has happened with financialization is that these roles have been reversed. And so the financial system now uses the economy to feed itself rather than the other way around. This is very, very terrible inversion. So to say it the way she says it, Ellen Brown, the money went to saving not the real economy, but the financial sector. Our money, she says, has been captured by banks. Banking must be turned into a public utility. Notice, not banks, but banking must be turned into public utility. State and local governments that have a mandate to serve the public must be treated at least as well as banks. So that's the principal idea of the article. So, and she ends the article by saying BND, the Bank of North Dakota, has been formed not to make a profit, but to serve the business and farm community. That's the original intention of that bank. So I want now to turn to something that has been really very difficult for me, especially in this last year, and not just for me, but for all the members of the Rocky Mountain Public Banking Institute. And that is, why is it that when an idea is proposed, yes, indeed, it's new to some anyway, but not to the people of North Dakota. Nevertheless, it's a new idea for most people that has many and indeed conclusive arguments going in its favor that will serve the public good, is rejected. This is, for me, a very tormenting question. Why? So I'm looking to find out, either outside of myself or inside of myself, what would keep me from not accepting something that is not only true, but has been shown to be practical. It has been shown already to be practical. It's not just hypothetical. It's just not a new idea. So I've come up with 4 reasons, and you see what you think about it. The first one is a very obvious one, that anything new, however well conceived, people are afraid. All of us, we can understand that something new can be something that we're afraid of, because we're concerned that this new thing that is proposed to make things better will actually make things worse. There's always a possibility that, you know, some new idea is really a crazy idea, or is an idea that is, yes, something new, but only benefits with very, very few people. So there is a natural, understandable a response of being afraid, and therefore you block it. I'm looking at what blocks new experiments. The second one, which is very obvious as well. Oh, and by the way, that's why people who don't want to have things changed, even if they're very good ones, they tend to make people afraid, even though they're not afraid to begin with. This is a classic tactic of any autocrat. So the second one is that there are many powerful interests that benefit from the status quo. If there are powerful interests that benefit from the status quo, obviously they don't want this new idea to take hold, because they will lose that special interest. And not only is it that there are these powerful interests, but they have, in my estimation, 3 very powerful tools with which to stop things. One is that they have wealth. Secondly, they have violence. And thirdly, they have control of the media, all of the information or most of the information sources, so that you can create areas where people disagree amongst each other. This has happened with social media a great deal in the 21st century. In the 20th century, the media were more or less of one voice. Cronkite, opinion was shared by the vast majority of Americans. There was a consensus. Not so anymore with the strength of the social media, and these are these are in the hands not only of individuals, but very, very powerful interests. And these messages that are given are not based on reason, they operate on subliminal levels. The principal authority on that issue is a fellow by the name of Bernard Bernet. I think Bernard is his first name, if I'm not mistaken.
Edouard Bernet.
What?
Edouard Bernet.
Edouard Bernet,
Yeah.
in the beginning of the 20th century, who essentially used propaganda. He was the nephew of Sigmund Freud, and he used propaganda because he thought that human beings, the masses, as it were, the vast majority of people, were not capable of determining their own future, and they need to be guided, but they're also somewhat dense. And so in order to be guided, you have to go to the subconscious. You can't appeal to the reason to get them to look after their own interests because they're not terribly intelligent. So you need to go for their own good, mind you, to go on the subliminal level. And of course, that was for the purpose of increasing consumption of goods and services. That's what it was mostly used initially by big business, because big business at the time, at the beginning of the 20th century, thought that intelligent human beings would be satisfied with the amount of things that they already have. Using the reason, they would understand they have enough. Maybe a little extravaganza here and there, but by and large, enough is enough. Not more is better. All right. Then the third one, which is the one that for me has been the most difficult to accept, and that is indifference. One of the things that has happened with us, with legislators concerning public banking, is that when we've proposed these ideas and we've asked people in the legislature, we talked to approximately what, Earl, about 20, 25 people over these many years, anyway, maybe even more. And we'd ask them, tell us what questions you have, and we'll attempt to answer them. So we've answered all of the questions, literally. We take a great deal of time, and they still don't do anything. That's indifference. So, and how come indifference? How come? Because people have been put to sleep. Again, somewhat unconsciously. Aldous Huxley had a different view of why people will give over their own power to a central authority. In 1984, the other opinion was, as you remember, was that the way that people would be subdued were with two things. lies and violence. This is essentially the fascist way. Lies and violence. Aldous Huxley thought differently in a book called The Brave New World. And then he wrote another one called Brave New World Revisited. But he said, no, it didn't object to the idea of violence and lies, that these would be the tools that some people would use, but primarily we would be seduced by pleasure. What today we talk about consumerism and comfort. Consumerism and comfort. And then there is, I think, the fourth reason, and this is something that I've had suspicions about, but it was confirmed by something that the former finance minister of Greece, Yanis Varoufakis, who's a remarkably intelligent person, and in my estimation, a remarkable conciliator, essentially, is that he again brought to my attention how often progressives fight against each other. Fight against each other. So the fourth reason is the splitting up from my opinion versus your opinion versus the third opinion versus the fourth opinion versus, well, you're really mistaken, etc., etc. And there's a lot of egoic stuff going on instead of coming together as we the people. We the people. So those two books that, and many others that I've been reading, this The New Possible, is suggesting how people from various parts of the society can come together and agree about a whole variety of things. Let me give you a list of another set of booklets that I've come across and that I want to suggest to both us, Earl and myself and others, but also to Ibrahima and land value tax people, is to create these little booklets. Listen to the titles. It's called the Case For series. So the case for a maximum wage, the case for universal basic income, the case for carbon dividends, the case for people's quantitative easing, the case for universal basic services, the case for Medicare for all, the case for economic democracy, the case for a job guarantee that modern monetary theory talks about, and the case for degrowth or steady state economics. That is to say, what I'm proposing is that we work together, we critique each other. Critique is different than criticism. Critique has a benign intent, is to say, Alec, this presentation wasn't really very good. This is what was awry with it, but it's not there in order to show how intelligent I am and how stupid Alec is, but in order to make Alec considerably better in the presentation that he's making. So I'm very much in favor of critique, but not this quarreling that has come together. And I think the society can be very conducive, as it has done with bringing our presentation together with the previous presentations on modern monetary theory and also on the land value tax, and to increase that to see how we can cooperate in producing the kinds of results that we would like to have for society. So it's a plea for unity without sacrificing particularity and distinctions. So what we are looking to do in Colorado with the Rocky Mountain Public Banking Institute is to say, we will continue with education, but we need to pay attention to these larger forces that are operating in keeping these very good ideas to be put into practice. So the principal next steps that we're looking at is to get together with the people that have already said that they support public banking. We have how many of those organizations, Earl? About 25?
I'm sorry, Alec, say that again.
Well, how many of these organizations that have signed support for public banking?
I think we had about 85 or something like
85.
that.
Oh, yeah, I'm behind the
Well,
times.
including organizations, political officials, and
Okay, yeah, that's why.
and businesses.
Yeah,
The organization's closer to 40 or 45.
okay. So it's around the right number. So is to approach them and ask them, what is it that you're interested primarily, short term, middle term, long term? What is it that you would really like to have enacted in legislation or enacted in society? So we know what it is that their goals are and say, here's how public banking can help you achieve those results. So we already create a partnership, as it were, that we're not suggesting something altogether different from what they are already working on, so that, again, there's no competition. So we work together, and this is what we ask of them. We ask, it's a big ask, and that is to put pressure on the legislators to pass public banking legislation. Not because they want to do us a favor, but because they themselves have an interest in having this sort of thing happen. So that's the net result of what our efforts are amounting to. And it's a really big deal because it takes a lot of labor. And one of the ways that we've looked to do that is we did a presentation, a national presentation, and we asked for volunteers doing, and telling us what it is that they're good at doing and how much time are they willing to give to us in order to do those things as volunteers. And then we're in the process of now speaking to them and finding out what they can do for public banking, including being able to speak to those organizations and have Earl and myself and Michael and Liz make presentations to those organizations to show them how public banking can be of benefit to them as well. I don't know.
We have some hands up, and there's one question in the chat maybe I'll address, and that is, are we proposing federal changes?
No.
And that's from Joe Bongiovanni. Actually, there's federal legislation is being proposed on 3 levels. One is to help authorize public banks to be established at the state level. That bill is sponsored by AOC and other progressive legislators. There's also a bill to establish a national infrastructure bank, somewhat comparable to the Reconstruction Finance Corporation that was a powerful source of money for our economy from 1933 to 1957, and especially during the Great Depression and during World War II. And then it tapered off. Never should have been closed, but there was that. And the third bill is to reinstate postal banks. There were postal banks from 1911 until 1967. they were invaluable for allowing unbanked and underbanked people to have a place to safely put their money. They weren't a bank in the sense that they didn't create money and make loans, but they did protect people's money in ways that were very helpful to those people in the community. So those are the three pieces of federal legislation. I'm not saying I wouldn't recommend federal legislation to change the pro-cyclical lending policies of the Fed and FDIC. To me, that would be very important because they offer a way to prevent bubbles. As we discussed in previous sessions, if the laws governing banks said you must lend most of your money for productive purposes, in other words, for small and medium-sized businesses, maybe large businesses, to produce new goods and services, rather than to inflate existing assets that creates bubbles. And also with an emphasis on sustainability. Let's not put so much money on fossil fuels and big ag and things like that damage the environment and our health. I think we should have laws like that governing banking at the national level, as
And
well as state level. Yeah.
I believe they have some of these in Japan. Is that not true? Does anybody know? Anyway, Patricia and then Marty.
You're muted, Patricia.
Yeah.
Yeah, Philly, I was just reading because I looked it up. I don't know what players there are. I have to find out, do a little more digging, but city council last year, I think it was 2 Februarys ago, passed an ordinance to have a public bank in Philly. And they're forming a board of directors and they're taking applications up to June 14th. So I don't know if anybody in the audience is local, like if they want to get in on that.
I know about that.
Yeah.
Have you been talking to them? Like, have you advised them and shown them your model legislation and stuff?
Yes, the Public Banking Institute has 2 monthly phone calls, and you can all get on the second one. They're the first Friday is for the leaders of different state and local groups, and the second Friday is really anyone interested in public banking. So go to the Public Banking Institute website and get on their calls. And we host the Philadelphia. People were on just very recently. And you're right, they've passed a measure to create a public bank. The mayor is not really in favor of, but I think he's term limited. That should help things. It's treating the issue as though not only is the Constitution not barring public banks, but also state law does not bar a home rule city like Philadelphia
Right,
from creating its own bank. And
right, doesn't need
they got some sympathetic ears at the state banking board level in Pennsylvania. Their initial step, the bank that they're creating initially, they're calling it a bank, is not yet authorized to take deposits and create new money, which is what a real bank does. And that's their ultimate goal, but it will establish the bank, get it going, get them making loans for things that are important. And then they think it will be easier to get the second step approved. That's their way of looking at it.
Are you talking about statewide? There's a state banking board in Pennsylvania that is trying to do a public bank for Pennsylvania? That could create its money? Oh,
They thought it, based on their experience, that it was proving too difficult to get a state bill passed to create a state public bank or authorize local public banks. And they said, let's just go ahead in Philadelphia alone and
okay,
create our public bank on the theory that under home rule, if you are strictly local, the theory is if you make all your loans locally and
yeah, that's right.
you
Yeah,
don't endanger the state's finances or other counties and areas, you should be able to, under home rule, be able to do it.
So there's a
That's
state banking board, you said, and they're favorable to Philly. Is that what you're saying?
Well, they haven't jumped on it, against it, and
Okay,
I understand they have given a sympathetic ear and said, we're not gonna stand up and oppose it. Whether that could change or not, I don't know.
okay, sounds good. Yeah.
Okay, let's hear from Marty. Hello, Marty.
Yeah, I appreciate the opportunity. It was a great presentation. I guess I think it's great that you're plugging along. I think it's great to focus on one state and not get bogged down. Some of that message was in the chat a little bit about getting bogged down with extra stuff. But one of the things I think might be very helpful as you strategize going forward is what I'd like to say is point out the conflict of interest that legislators have on the opposition when they take campaign contributions from the private banking sector.
Yeah.
You probably can't do that, but then you can do that subversively, let's say, when you take the message to the public. You can say, well, here's the people that are going to vote against this, and here's the reason why. So I haven't heard that you've gone on an aggressive path like that, but that might be what you need to do.
That's a good point. And we actually got what I felt was not the best advice from a lobbyist. We hired some lobbyists a year and a half ago, and the big banks put out a letter to all legislators raising questionable theories. And we thought we should respond to that. And some of our group thought, well, our lobbyists said, no, don't bother with responding to that. The legislators won't pay that much attention to it. And we thought later that was not good advice. If someone is going to attack your banks as being as they did, it's risky, it won't work. And other things that we had very good arguments against. It's not risky because the Bank of North Dakota has never failed in 100 years. The bank in Alberta in 84 years has never failed. They're both profitable. It's not going to be controlled by politicians, as the very long experience of these banks proves. And same thing in Germany with 200 years of experience with no bank.
Challenge them to a public debate on a public TV or something, you know?
Yes, that's a good point. I think, as a trial lawyer, if someone throws dirt at you, you have to fight back. You don't just go silent unless it's so unbelievable that you're wasting your time.
Yeah, thank you.
Yeah, Yanis.
I think Richard was ahead of me.
Okay, Richard.
Thank you, Yanis. Very good talk, Alec and Earl. Very informative. Earl, I was just a little confused when you were talking about constitutional amendments. You weren't talking about the state level?
Yes.
I was talking about the state level. Let me elaborate a little bit. There are provisions in state constitutions, at least 45 of them, and we only have 50 states. So that's a lot of states and a great majority that made it sound like maybe public banks wouldn't be legal. But we showed through legal research and legal history that was not the purpose of those constitutional amendments. One of the provisions said a state may not lend its credit to another entity. And we showed that provision, which is in all these 45 constitutions, does not bar public banks because, first of all, lending your credit is not lending money. Lending your credit is letting someone else use your credit. That's when you co-sign a loan for someone else or guarantee
Yes.
someone else's loan. And secondly, there's case law that says if you're lending your credit and it's for a public purpose, that does not bar a bank, even if you interpret lending your credit as making a loan. Another provision that is in state constitutions is that the state or political subdivisions may not enter into joint ventures with private institutions. But the purpose of that is to prevent them from letting the private institution have a majority interest and control the enterprise. And it wasn't about banks, it was about railroads in the 19th century, in the early mid-19th century. Many cities made joint ventures with railroads as the railroads were expanding westward, and they were often quite speculative. And the cities would invest in that, but was controlled by the private railroads, whose shareholders were willing to speculate on a particular track, making a huge profit and growth occurring along that corridor. But if that failed, the bank failed. The bank declared bankruptcy and its shareholders walked off still with plenty of money, and the city was left holding the bag. And that's why they had that provision about joint ventures. Well, a public bank would not be in a joint venture giving majority control. In our measures, it's 100% public control. And it would be serving a public purpose. And there's a case in Colorado by our Supreme Court that is beautifully in point and applies really everywhere and shows why this principle is valid. United Airlines was threatening to leave Denver. And they said, you know, if you allow us and help us build a terminal where we can, I think it's repair planes, we will stay here. And the legislature decided to support that. Now, some people might question that you're helping a private business, but the goal was we're going to increase a lot. One of the goals was we're going to increase jobs, keep a major national corporation in Denver, and keep many, many jobs here and support our economy. And the question to the Supreme Court was, well, does this violate this joint venture provision? And they said, and it was a split decision, they said it's for a public purpose. And if they say it's for a public purpose, we're not going to debate whether they correctly decided that. They approved it. And that seems to be a principle that is valid elsewhere. And it makes sense. If a public bank is going to provide a great deal of public benefit, a net public benefit, that provision certainly should not bar it. And it's not a joint venture with private parties in control, which is what created the risk, where they're, you know, speculating with public money for private benefit. And again, that's what the problem with having 97% of our money created by private banks is, that they speculate and take great risk with our money for their benefit, and it hurts the public tremendously.
Earl, is there any conflict at the federal level with the prohibition against states creating money?
No, that's that only prevents state from creating money directly, issuing currency in effect.
I see.
That does not bar public banks. That doesn't deal with banking.
Okay.
Yeah.
Thank you.
Anybody else? Yanni?
Yes, thank you for the series, and it sounds like you've done great work and you've achieved. I mean, you may think you have not achieved what you wish you have achieved, but actually you've done great headway, and thank you for the advice. Now, if I can be a little bit, return a little bit the favor, and give you some advice, and I don't mean it in a condescending or pedantic way. I would advise you to not latch your project on other agendas. For example, you mentioned Earl, like you said something about fossil fuels. Why would you go against fossil fuels? Seriously. Currently, let me finish. Currently, fossil fuels are greener than renewables. All right. If you account for all the environmental costs, all the mining, all the energy, which is now dirty energy, okay, that would produce the solar panels, okay, and the environmental impact of their massive installation, if you do the accounting right, you would see that fossil fuels are greener. And with carbon capture, that the fossil fuel companies are almost have done a great headway to, you would like, why would we go your way? It's not greener. So I understand you believe that renewables are the greener option right now. We can debate that, but you have no reason to latch your public banking project, which is unrelated to that, okay, with such controversial issues, which will at least guarantee you have 50, it will make your effort to achieve consensus and expand your base. You basically you shoot yourself in the foot. And
Okay,
there is no reason to do that. As Alex said, do not make such blanket statements. Go to the fossil fuel companies. Say, how can public banking be of use to you? You can put exactly. You can do the same with the renewables. Okay, but then who is greener or not? It's not. The jury is actually leaning against you. So if you're trying to be environmental, then you have to think a little bit more carefully, because environmentalism and what is more green or not, it cannot be asserted or conjecture. And that's what
Yeah.
I fear right now. So
Yeah,
that's a general advice.
Yeah.
Now, the other okay, go ahead. I have a couple of other points, but go ahead, Earl.
all right. Yeah, I was going to say, you make a good point. I didn't mean to, maybe I overstated when I talked about fossil fuels. That should be on a state by state basis. For example, in North Dakota, they don't spend a great deal of their money in fossil fuels, but they don't oppose it either. And that is also true in Alberta, where the fossil fuel is a big part of their economy. I'm not sure how much of their lending is for that, because the big banks are very much able to do that for the most part. But in some states, it's able to put more emphasis on clean energy than others. And I don't think you're saying we shouldn't do that. Is that right, Giannis?
No, actually, as a child, we installed solar panels on our roof. We were in the mecca of solar energy, which is Greece, and I saw how that reduced our electric bill. And it makes sense. A country like Greece could operate itself. So we want solar panels. We want it, but the technology currently does not support wholesale replacement of fossil fuels, and the infrastructure too, and the grids. You see, Texas, which swims in oil, and it's a fossil fuel economy, right? And they have gone with the renewables, and they got beat in the tush when the weather exposed the unreliability of the renewable energy grid. Okay, so you have reliability, and is something important, and something that the renewable energy advocates do not seem to factor in their calculus. So
Yes,
my
yeah.
criticism is actually to include that in, and if you include that, you would say you wouldn't be as like monoclonal in your approach. Okay, so the same thing applies to nuclear, for example, and this leads me to the second point, which is, what is the definition of public? I heard recently a very a Margaret Thatcher quote. She says, "There is no such thing as society," and it sounds like, what is she talking about? And I think she's right. There is no such thing as society. What we call society is kind of like a naturally and organically grown set of networks and connections. What that means is what you call public is actually local. So I think if you replace the public
Yes,
with local, I think you will get more traction because all of a sudden the local communities will realize, oh my God, I can control how values are created or coming in my jurisdiction.
We
When
have,
you talk about public, you talk about centralized bureaucratic entities, okay, which are individuals, which are private corporations, okay, with extreme monopolistic power. That's what government is, unfortunately. That applies to federal, that applies to state, and if you talk about New York City, it applies to New York City maybe even more, which is a municipal government. And we have
All
a
right, yeah.
100 billion budget, which is
Janice, if
so
you could
inefficiently
summarize, that
spent.
would be great.
So that's my
Giannis,
comment. The concept of the public needs to be made more robust and more explained, because
Yeah,
to me,
yeah,
it doesn't
Giannis?
convince me it's public.
Giannis, you make some very good points. Our time is getting short, and I see Tom Rossman has a question. How would it be if we let Tom ask a question?
but
Thanks,
I-
guys. Yeah,
I-
another great presentation. Go ahead, Alex. Sorry.
Tom Rossman,
Go ahead,
Yeah.
Tom.
Okay, yeah, so again, great presentation. I think it's so powerful. And you know, I've actually spent a lot of time, this is more toward what Alex was saying, spent a lot of time just looking at movements and how to communicate ideas. And I think, you know, one of the core challenges, even going back to Bernays, but even more recently, the last 50 years of behavioral economics and the development of cognitive neuroscience in the 90s and for the last 30 years. And it, you know, definitely shows that you have to appeal to people on a very emotional level to be able to connect with them. And one of the things that's the key theme in all of those is that you not only have to appeal to emotions, but you also have to have a very simple argument. And you think about you know, some of the simple arguments that have been successful in redefining from the Friedman doctrine to the Laffer curve to you know, government is bad, government's not the solution, it's the problem. And so I think, you know, trying to get too involved in a lot of different issues kind of confuses the issue, and it lumps you in with a different level of activity and a different group of people. So I would definitely stay away from things like UBI and MMT and other issues which are not as clear cut, and really just focus on the issues, you know, what Henry George asked, which was, you know, with all the wealth that's being created, why are so many people still poor? And why has the middle
Yes.
class continued to shrink and lose ground, even though the overall wealth of the country has expanded dramatically? And so I think that would be a real key. And you know, obviously, opposing well-funded banks. You know, if you look at what Uber and Lyft did in California, a very liberal state, where they spent $200 million to defeat Proposition 22. And even in many liberal areas, even voted in favor of Proposition 22, which kept gig workers and did not allow for gig employees, for Uber employees, to be treated as actual employees as opposed to the temporary gig workers. So I think that's really important, and I think focusing in on a few issues, like, for example, fairness. You know, is it fair that these banks are making all this money while communities are getting hollowed out and individuals are not able to finance their businesses? So I think there's a powerful argument, but I think it has to be presented in the right way, and it really has to be focused on one or two central themes and connect with people emotionally so that they can, you know, it's really about, you know, not to really get into Robert Schiller and some of the more elaborate plans, but you know, you have to change the narrative. That's really what it comes down to. And the narrative that we have now about banking and money, I mean, even you guys have mentioned several times that it was hard for you, even though you're knowledgeable and very well educated, you know, it was hard for you guys to really get your hands around this. So the general public is at an even bigger deficit because they don't have the academic and business experience that you have.
Yeah, that's a very good point. Tom, one of our ways of putting this very simply is let's bring our money home, let's invest it locally, and let's have the profit on our money come back to those people ourselves who are contributing this money.
And I think
Anyway.
that's a great theme. Strong, you know, fairer economics and stronger communities is a great. I think those are two great points. That
And the environmental issue, even though we don't specify what in particular.
Yeah, I think environmental is important, and that's definitely something that's going to be key, especially with, you know, some of the new the heat wave and the drought in the West, as you guys know, being, you know, with the Colorado River proximity, that's a big issue. But I think once you start to bring in other issues like UBI and MMT, you know, you're really starting to I think dilute the power of the message.
Yeah, very good point.
Okay, then first, I think, oh, we still have a few minutes. My own sense about these last questions is, I'm not very big on government, as I'm not very big on corporations. So when I speak about this third alternative is we the people, I think that, and also discovering what the common will is. And now there are new methods that have been suggested as to how we can discover what the common will is, and therefore public banking in understanding the common will would be to put that will into practice. Not what the government wants and not what the corporation wants, but what the people that can express its will, and we can discover what the will is of the people, unlike in the past when we couldn't. Yes, all monopolies are legitimized by government. Yes, that's the definition of fascism that Mussolini gave, which I think still stands, is the cooperation of government with corporations. That's his definition of fascism.
Yep, ruled by corporations.
With the not only consent, but with the cooperation of government. I think that
exactly.
Yanis is a very important piece to say that, and liberals have not considered adequately, I think, the negative aspects of government. It's seen the government as too simplistically as the savior. And a public bank, even though it's owned by government, we make very, very sure in the legislation that it's not influenced by corporations and is not influenced by politicians. This has been a very important part that we've paid a great deal of attention not to have that happen, because we see them as entities that can betray the public will, the common will. Okay. Well, thank you very much for your attention, and we look forward to really cooperating, Ibrahima, and with all of you to see that what public banking can contribute also to other of your endeavors, so that again, we're not split up.
Thank you very much, Alec and Earl, and all those who attended this 5-session course. And just to let you know that we are planning another webinar coming up very soon that we will do in collaboration with Alex Institute, where we will put the two reforms, monetary reform and land value land reform, the idea of a land tax that we all defend here. It's going to be a panel, and we will be posting it anytime soon. And I think Marty Rowland,
Will it be in mid-August or sometime?
it's going to be, well, I'm thinking to have it a little early, maybe around mid-July, but it all depends if you are able to gather all the speakers. But we'll work on that privately, you and I.
Yeah. Okay. Very good.
And Marty's class is upcoming. We've posted it. So if you haven't registered yet, please
When
do.
is it?
Marty, hold on, Alec. We are getting there.
Okay,
Marty is here and he's gonna introduce the class. Okay.
Let me describe. So this is the book, and I was pleased to hear from Michael last week that several people in the UK have been using this book that was written in 2008 very closely, and it is worthy of a real close study. So I'm going to be teaching a 3-part course based on this book, going from the beginning to the end. The first class starts next Wednesday at 6:30 on the 15th, and we'll go straight through. And then in the fall, like late October, September, we'll do another 5 classes, and then somewhere around November, we'll do the last 5. But Brian Hodgkinson, in my opinion, is a genius. He at arm's length, he holds George out, not for anything that George has done wrong, but that George hadn't gone far enough. So the first 5 classes, I'm going to go into the types of firms, like the perfect competition, competitive monopoly, and then monopoly and oligopoly, and going through his way of teaching it with a lot of good references to Keynes and Schumpeter and others. But he makes the excellent points that really makes that course coming up a good follow-on to what you've been having for the last 5 weeks here. So,
okay, thank you, Marty.
And we do have the link to this book. You can actually get a Kindle version for like $9, but otherwise it might be $15-20.
Actually, it's about $6, Marty, if I'm not wrong.
Oh, 6, okay.
Even cheaper. So, okay, so we look forward to seeing you all, and have a nice evening.
Yes, indeed.
Thank you.
Thank you very much for your attention. And if you have the time and inclination, please look at this legislation that Ibrahim is sending you, and send us comments. Whatever critiques you have, we'll definitely listen to them and change things.
Fantastic. Thank you.
Thanks a lot.
Thanks so much, guys.